For decades, the Made in China label meant one thing: cheap goods. But today, it means something else. It's a clue to a story the Chinese government doesn't want you to hear. A story of crashing property values, citizens who are too afraid to spend, and factories that are being pushed to the brink. This isn't just an economic slump, it's a deliberate choice, and it's a choice that is starting to backfire on us all. Okay, let's start with the hard numbers. China has two key inflation measures. The Consumer Price Index, or CPI, tracks prices you pay in stores. The Producer Price Index, or PPI, tracks prices at the factory gate. For a healthy economy, you want both to be rising modestly. But the recent data for May 2025 shows a worrying trend. The CPI came in at minus 0.1%. That means prices are falling. Even more alarming, the PPI has plummeted to minus 3.3%. A negative PPI means factories are desperately cutting prices to offload their products, a clear sign of a vicious price war. So, what's causing this? There are two powerful forces colliding. First, extremely weak domestic demand, born from years of economic policy. The biggest factor is the collapse of the property market. For decades, Chinese families poured their life savings into real estate, believing it was a one-way bet. But with giants like Evergrande defaulting and leaving ghost cities of empty apartments across the country, that wealth has vanished. Youth unemployment has also hit record highs, sometimes exceeding 20%, leaving millions of graduates without hope or spending power. This is on top of a system where independent labor unions are illegal, giving workers very little power to bargain for higher wages against grueling work cultures like 996. With no strong social safety net for healthcare or retirement, the rational choice for anyone who does have money is to save it, not spend it. The second cause is massive state-driven industrial oversupply. This is a direct result of government strategy, like the Made in China 2025 plan, which aims for global dominance in key technologies. The CCP directs state banks to flood these chosen sectors with ultra-cheap loans. The result? A tsunami of production in everything from solar panels and steel to, most famously, electric vehicles. China is now producing millions more EVs than its domestic market can possibly buy, forcing a brutal price war where companies are selling cars at or below cost just to survive. Now at this point you might be asking, why is this deflation a bad thing? After all, who wouldn't want cheaper EVs and solar panels? The danger is immense, and it unfolds in two stages. First, the domestic risk. Persistent deflation creates a vicious cycle. Prices fall, so people delay buying things, expecting them to get even cheaper. This causes prices to fall further. More importantly, deflation makes debt more expensive. Imagine your main asset, your home, loses 30% of its value, but your mortgage payment stays the same. You would stop all non-essential spending to focus on that debt. Now imagine hundreds of millions of people doing that at once. This is the dreaded balance sheet recession, the exact economic black hole that Japan fell into in the 1990s, leading to nearly 3 lost decades of stagnation. China is exhibiting all the same symptoms: a collapsed property bubble, high debt, and falling prices, but on a scale that makes Japan's crisis look small. Second, the geopolitical risk. When a country produces far more than it can sell at home, it must export the surplus. This means China is now flooding global markets with products at prices so low they are considered dumping. We are already seeing the backlash. the European Union has launched a major anti-subsidy investigation into Chinese EVs, with officials like Ursula von der Leyen stating that global markets are now flooded with cheaper Chinese electric cars. In Washington, President Biden has reinforced tariffs, arguing that China's practices are not competition, but cheating. This is sparking a new wave of protectionism, risking a global trade war that could disrupt supply chains and raise prices for everyone in the long run. As a final thing, the textbook solution to deflation is simple: put more money and confidence into the hands of your citizens. The CCP could launch massive consumer stimulus programs, offer direct cash handouts, or finally build a robust social safety net so people feel secure enough to spend. But they have been ideologically resistant to what they see as Western-style welfarism. In China's political system, the CCP's legitimacy comes from providing growth and employment, primarily through a powerful industrial and manufacturing sector. Giving direct handouts, in their view, could encourage laziness and undermine the work ethic that built the country. So they are trapped in a dilemma. Do they pivot to a consumer-driven economy and risk losing control? Or do they double down on their state-led industrial model? At this point, it looks like Beijing's priority remained fixed. Maintain China industrial dominance and the world's dependence on its exports. They are choosing to save their factories, even if it means suppressing their own citizen demand and risking a Japan-style stagnation. This choice is the final clue in our story, and it is the biggest red flag of all because it ensures that China's internal problem will continue to spill over into the rest of the world. Okay, thank you. When you think of Switzerland, what comes to mind? Snow-capped mountains, luxury watches, decadent chocolate, and unshakable wealth. It's the picture of perfect stability, a financial fortress standing tall in the heart of Europe. But beneath this veneer of calm, a financial time bomb is ticking. An unseen crisis, powered by the very thing that makes Switzerland so successful, is threatening to destabilize the nation from within, with consequences that could ripple across the globe. So in this video, we're going to expose the unseen economic crisis in Switzerland. We'll uncover why its greatest strength has become its greatest danger, and ask the critical question: is this time bomb about to go off?